With that, please help me welcome Jeff Jordan. Hey, Jeff, how you doing? Thanks for coming.
Thank you very much.
All right. Well, Jeff, thank you for joining us. We're excited to have you here.
Thank you for having me. And
First,
I'm
imagine, I'll
privileged.
ask the same question I asked John. First, imagine, what do you think, Jeff?
Oh, this is awesome. I was early at eBay. I joined eBay when there were about 200 people. And I remember once we just made the biggest, what felt like risk at the time, we had a first eBay Live, where we invited the community to come and and just interact with each other, learn from each other, self-validation, education. We were wondering if anyone would show, and something like 5,000 people showed up. And this has that same kind of feel. I mean, I think John talked about it earlier. A fervently fervent community that really is, there's a complete sharing of destiny. If they're successful, we're successful, and
Sure.
it feels exactly the same.
Yeah, it's interesting. The first Imagine, Bob's here. Bob Schwartz helped us put together the first Imagine. And the first Imagine, I remember having conversations, is anyone going to pay? Is anyone going to show up, right? And it's these moments that you look back years later and you say, wow, there's really an audience out there that is passionate about this. So we're excited. Jeff, you have a long history of staying on top of the e-commerce trends, seeing what's happening in the market. Today, what are the most exciting trends that you see in the market?
Well, I mean, for me, this is, I've only been an investor, a venture capitalist for 2 years, and it's got to be about the most exciting time to be in my profession. Because venture is all about that revolution. What's the next revolution that you can invest in? And you kind of look at what's happening in e-commerce now, and I agree with John completely. It is a complete revolution. I mean, if you take a historical view on retail, 20th century view on retail, it was kind of mom and pop physical stores. And then, I don't know how many of you know Joseph Schumpeter and his theory of creative destruction. But the mom and pop store was replaced by Sears, which then was replaced by malls, which was replaced by big box. I believe we're at a point in time where physical retail is under siege in most categories, and it's migrating online really rapidly. And the brands of the future, the big retail brands of the future, are going to be built online and not offline. I mean, you're never going to see another thing come out of the mall. It's going to come off the internet and mobile.
Very interesting. So, from your perspective, Jeff, what do you think the advantages of online retailers are when comparing the offline retailers that we know?
Way back in my career, I was the chief financial officer for the Disney Store. So I got a pretty good sense for the economics of physical retail. And physical retailers spend a ton of money on real estate, on all the locations, whether in the mall, the strip mall, whatever it is. They spend a ton of money on labor. They have to stock every store with inventory. So you have these redundant piles of inventory all over. It is just, frankly, relative to an online retailer, it is a dramatically higher cost. So one fact, the people cost. Walmart's revenue per employee is something like $200,000, $250,000 a year. Amazon's revenue per employee is $1 million per year. So I mean, just physical retailers are at such a massive cost disadvantage that online retailers can compete. So probably the hardest person online to compete with is Amazon. So compare Amazon and Best Buy. Best Buy's got tons of stores full of inventory that they have to stock all the time. Amazon has DCs. Frankly, Amazon can sell and make a profit well below Best Buy's costs. And so, Circuit City went out of business 2-3 years ago. Best Buy is going to go out of business in the next year or two. And that kind of change in retail is just happening in front of our eyes.
Do you think this is true for specific verticals or in aggregate?
It's funny, there's the macro statistic that I think that 8% of US e-commerce or 9% of US e-commerce, US commerce is happening online in e-commerce. But when you dissect that by category, it gets particularly interesting. Most food is still offline. Most drug store type things are also offline. If you go to the categories that have gone online, you have clothing, home furnishings, electronics, and media are anywhere from 10 to 25% online already, and those growth curves are just going straight up to the moon. And so we did an analysis last year in the consumer electronics category that said, okay, the total pie of all consumer electronics sold in the United States has grown modestly over the last 10 years. I mean, a little bit. But the part that's online has gone to the moon. I think it's at 15% right now. What's happened is the remaining left for the physical companies has actually shrunk. Consumer electronics sold through offline retailers is much smaller today than it was 5, 7 years ago. And physical retailers with really highly leveraged and fixed costs just can't absorb that decrease in, their shrinking part of the pie, and they just disappear. So there's been a pretty dramatic increase in offline retailer bankruptcies. We believe it's going to increase and accelerate.
Do you think would be interesting to get your point of view on what verticals there are opportunities for online that haven't been executed on to date?
No, I mean, the creativity of you guys out there is just stunning to us. So, I mean, I remember early at eBay, you're looking at Amazon, Zappos launched. I said, I can't believe anyone would buy shoes online. And so they built a set of unique processes that, free returns, all this, that made a wildly successful shoe company. So that made me revisit some of my assumptions. My favorite one of late is actually a Magento customer, I believe, Warby Parker. Warby Parker went into the prescription eyeglass market. So name me a product that would be harder to fulfill online than prescription eyeglasses. And these guys came in, and last time, I actually, after our meeting with them, I went and checked. I spent $430 for my last pair of prescription eyeglasses because the used car salesman, like optometrist, was saying, oh, you have to add coatings, progressive, this, that. $430. Warby selling high quality, high fashion prescription eyeglasses fulfilled online for $95. They've destroyed an inefficient physical value chain and are providing a great service. So if you can sell prescription eyeglasses successfully online, you can sell virtually anything successfully online.
That's very interesting. I was in New York last weekend, and I happened to stop at the Warby Parker store in Soho, and check it out. What's interesting is that online businesses are now starting to have showrooms and starting to go offline in some ways. Yeah. What do you think about that, and is that a trend that we'll continue to see? Right.
It's a really interesting trend. So Warby's done it, Bonobos has done it, a few others. They're doing stores, but they're doing very, very different stores. Almost every store they're doing is co-located with one of their offices. So the Warby store is on, I think, the 3rd or 4th floor of their Soho office building. They have a little showroom out front. You cannot walk out of any of these showrooms with any clothes. All they have is samples. So they're not fully inventorying something that you take it back. You try things on, and then they fulfill out of their distribution center. So their real estate cost is much lower because it's a 3rd floor co-located office space. Their labor is much lower because they schedule. They say, okay, you can come in you have an appointment at 1:30, and then they have no inventory carrying costs because they're fulfilling it out of the DC. So I think it's a really creative approach that retailers where trying on is important can lever in a very efficient way.
That's fantastic. That's fantastic. Now I know you also worked with Fab.com. And Fab is, considered by many as the staple of social and engagement. Any specific things you can share with the audience here that you've learned through your interactions with Fab.com that are, interesting and important for merchants to take away?
Yeah, we love Fab. Who in here has bought from Fab? Thank you, and others, please try it. It's a wonderful store. Fab is a site about everything that's great design. Be that home furnishings, apparel, pet supplies, food, anything. It's an incredibly highly curated shopping experience where their homepage each day will have highly suggestive things that are just beautiful and interesting, and you'd never think to develop. We have a philosophy at Andreessen Horowitz that e-commerce 1.0 was largely a search experience. You type a keyword phrase into a search bar, and either Amazon and eBay told you what they had that most closely matched that query. It's Google for product. We believe e-commerce 2.0, which is emerging now, is much more. There are a lot of trends. One is discovery. People are doing suggestive merchandising. My office is basically outfitted with things I bought on fab.com, not one of which I would have thought to search for. I have these oversized Lego blocks that I saw one day. I said, oh, they're really cool, and poofs. I didn't know what a poof was, but I saw one. I had to have it.
Yeah.
And so you get that suggestive merchandising, the curation that's there. So Fab has built a beautiful website, and then talk about the innovation of a great entrepreneur. When Fab launched, I'll tell you the whole Fab story. It's pretty fun. It's launched as Fabulous, a social network serving the gay community. And what they found is Facebook actually did a pretty good job servicing the social needs of the gay community. So one of the products they tried while they were building the social network for the gay community was the gay deal of the day. And they offer a product, and that product actually sold really well. So at one point, the two founding entrepreneurs, Jason Goldberg and Bradford Shellhammer, went away and just said, Facebook works there, but this product thing's really intriguing. So they went dark for like 3 months and relaunched as Fab.com, a design marketplace. It exploded. It's the fastest growth curve I'd ever seen. They launched, I think, in June or July of 2011, and by Christmas it was on a $40 million run rate. And so you're just a little bit like, caught our attention. And so we invested. Now, one of the things that was, their success created a challenge. What they do is they aggregate the products of small, beautiful designers around the world. And those designers were finding they could sell more in a 2-day Fab sale than they would sell the rest of the year. And lo and behold, those designers weren't really well equipped to deliver those sales in anything approaching e-commerce time. I think it was 62 days for one item. So, so Fab realized, okay, we're gonna keep the growth curve on, but we're gonna start having inventory in first a third-party warehouse, and then in a warehouse they built, and now they're starting to direct source products onto their marketplace, and then they've gone global, and they've done all this in about 2 years. And they are now, I think the last number they disclosed is well north of $100 million run rate, and on their way to $250 million.
It's a great story.
Yeah.
You mentioned that you saw their growth and that caught your attention, and then you invested in them. What do you look for in companies when you invest?
First of all, the quality of the entrepreneur is paramount. You have to, we believe that companies run by founders are best positioned to create value in the technology marketplace. You look at a lot of the founder-driven companies, Amazon with Mr. Bezos, Zuckerberg, Larry Page and Sergey Brin at Google, Larry Ellison, Steve Jobs. So we look for that great founder. That's decision 1, 2, and 3. After that is the product and the product market fit. Is it done something that's making that the market's reacting to? And then lastly, the market. You want a big market. In venture capital, the vast majority, almost all returns are generated by a handful of companies each year. And so it's a hit-driven business. It is Hollywood, and so we want to be in those companies that can be one of those 10 companies that creates 80 or 90% of the returns in our industry. So you swing for the fence.
That's fantastic. So let's switch over to mobile commerce. I think it's something that resonates with our audience here and the market. A lot of our retailers are struggling in some ways, but also looking to experiment and have some great opportunities in terms of where to invest their dollars when it comes to mobile commerce. You speak to a lot of merchants, and they're investing in both, sometimes both mobile native apps and responsive web design, web-based approaches. What is sort of your perspective on it? How do you advise your companies when they're...
Yeah, the conversation John had, we're exactly the same place. Mobile is here. You've got to be screen agnostic. Fabs had days at Christmas last year where over half their sales were coming from mobile. Pinterest gets half their traffic from mobile already, and they just only recently came out with this suite of mobile products that they are proud of. So the consumer is consuming on mobile, or actually, they're screen agnostic. Do you call tablet mobile or not? But they're buying on tablets in massive quantities. So as anyone who wants to do commerce electronically, if you ignore the mobile screens, you're ignoring a large portion of your addressable market, and you're underserving it. So I mean, the opportunity is, we think just immense. And you're seeing an ecosystem building around mobile-first products. A company in our portfolio is a company called Jumio. And it's out of Austria, and it's a really simple, at its core, it's a simple technology. You hold up your credit card to the camera of the computer or the mobile phone, and it optically reads the characters on the camera, gets your name, gets your credit card number and your expiration date, and saves you from needing to enter all those devices, all those numbers laboriously on your iPhone. And so, immediate capture and things like that. So there's an ecosystem building around mobile e-commerce that we think is going to be as strong as the ecosystem around e-commerce, and it's a huge opportunity.
So, mobile is a great theme. Also, we talked about Fab.com and engagement, discovery. How do you believe online retailers can captivate their customer base and really transform them into communities, given the value that we see at Fab and other online retailers, community-driven commerce? Is that something you see?
Yeah, no, it's huge. The people who do this well do it incredibly well. Fab does this extraordinarily well. Jason is a social marketer at his core. So, Fab has the stream. eBay had that very engaging feed. Fab has a very similar product. You buy things on Fab, they're posted into Facebook in a very contextually way, proven way. Every way Jason can think of his community validating the Fab purchase, he employs. Another one that does this fabulously well is Rent the Runway, which we don't have a position in. Rent the Runway lets women rent beautiful designer dresses for their Cinderella moments. So one truth about very special occasions that I've seen to come is women don't like to wear the same dress twice. So if you buy an expensive designer dress, you are pouring money away. So in the sharing economy, the collaborative economy, that doesn't make sense. So an entrepreneur named Jen Hyman came up with the idea, I'm going to buy designer dresses and let women rent them for a night. And she calls it their Cinderella moment. They'll go to this beautiful event, and they'll be feeling great in a beautiful designer dress that they rented and then returned and can rent another different dress the next time. What Jen found is her customers were taking pictures of themselves in their beautiful Rent the Runway gowns and posting them on Facebook. And she's like, okay, they're posting them on Facebook. Why don't I let them post them on Rent the Runway? Yeah. And so she developed this thing where all of a sudden her customers are the models on Rent the Runway. And so if you're a woman and you say, okay, I have this body type and this color, I'd like to rent this dress, let me see how it looks like on other women who share these characteristics. And her customer is the star. And it's such an incredibly engaging way to embrace your community. So you're seeing incredibly, compelling executions of, my community is the company, sure. And that for me was just a beautiful representation.
That's fantastic. That's some great innovation there.
Yes.
So last question for you, Jeff, and I'll finish with the same question that I asked John. Yeah. It's Imagine 2016. You're back here on stage, Jeff, if we can get you. What is the message that you'll be delivering at Imagine 2016? Well,
I mean, we are privileged to get to meet with an enormous number of e-commerce companies that come through looking for funding. And we have this very bullish thesis on e-commerce. So one thing we have noticed is when we say, a question we always ask, what is your technology? A number of them tell us Magento. So Birchbox, Warby, I mean, they're going through
like that.
So that's which there. So, I mean, that one is, build huge businesses and let us fund them. I mean, because we believe the future is in electronic commerce. The leading retail brands of the future will not be built in the mall anymore. It's basically throwing out the last century of retail development. The brands are going to be online brands. So we are incredibly bullish. We have investments in Fab, Pinterest is an enabler, Zulily. There's a wonderful cosmetics beauty company, online beauty company out of Seattle called Julep that does
also
a lot.
Magento.
Also excellent.
That's right.
Also does what Warby does. They collapse an incredibly inefficient supply chain. It may not surprise you to find out that the actual cost of the incredibly expensive product you're buying at the floor of Neiman Marcus or Nordstrom's actually didn't cost that much to make, but the multi-level distribution in the offline world tax costs on it each step of the way. If you're an online e-commerce beauty company that sources your own product, you can undercut the competition with a beautiful value, and as well as may earn a very healthy return on that. So I mean, you're just seeing, you know, new sourcing ideas, new social ideas, new alternative distribution ideas like flash sales. There's so much innovation going on in e-commerce now that, you know, like we believe that this is a community-based approach where we win, you win is the way to build a wonderful business in the 21st century, whatever we're in now, and this is the wave of the future.
That's fantastic. And we look forward to having Magento power a lot of these success stories.
Yeah, and so if you're building a huge, beautiful e-commerce business on Magento, please keep us in mind.
You got it, guys. There you go. Thank you, Jeff. I appreciate it. Thank you. Thank you. Jeff Jordan, guys.